Hello traders, Gary Wagner here, just about 10:25 in Honolulu, 4:25 in New York. It is Thursday, 2nd day of June 2016, and this is the Daily Report for Gold and Silver. Whether or not we realize the fact that summer has come, but summer has come. We've got very, very light trading day, narrow trading range, precious metals under nominal pressure, but they are trading lower. Gold off about $2 on the day, current print $12.13, showing off $1.70 on the day. Now the key is the range, low $12.12, high $12.20. We're looking at an $8 range on the day, which is not too much. So traders, even though we do have a quiet trading day, very, very little range, I think we are able to glean some pretty important information from recent price action in the market. And the information that we're able to glean pertains to various levels of support and resistance, and the fact that I think that we are at the tail end of this current retracement. Of course, the retracement I'm talking about is the move from 1306 down to its intraday low at 1199. And the reason that that number happens to be fairly significant is that it falls within the confines of a 38% retracement. And that retracement is, of course, of this large move from 1045 up to 1306 and then back down to 1206, this $100 drop in price. It does match up with these lows that occurred in March, and I believe that this is the area that we should see the market find some support and complete this current correction. Which brings us to our current Elliott wave count and our forecast models, which have been looking for a strong bottom and a strong bottom right in this area. Now, I have tackled with the fact that we saw our big spike, this what we had labeled as a wave 3. This took us up to about 1260. We had a retracement taking us back down, of course, and then we did make a higher high. And so for that reason, I had labeled this 3, 4, and 5. Now, I do want to give a shout out to a very, very good friend of mine and a gentleman who I happen to think is an exceptional trader, Dave Bannister from ActiveTraders.com. We do communicate a lot. After talking with Dave, he pointed out the fact that what we're probably looking at, and that is that this wave 2 that we're just experienced has been an irregular ABC. Now, the difference between an irregular ABC, if a market moves up, and we'll call this wave 1, for example, and then we go into wave 2, wave 2 is typically going to be combined of a B, and then a final C. Now, the distinction on that is that when you look at the various components, meaning your A, your B, and your C, your B is always going to be in a standard correction. Your B will be below the high that was achieved on this rally wave. So that you'll move all the way up. You've got a wave 1 here and then an ABC. Now, what an irregular correction is one in which you have a scenario in which you've got an A and the B wave actually exceeds 1, and then you move back to your C wave, completing your wave 2. That tends to hold some weight as I look at this market. And that being said, in other words, the way that we were numbering them came up with the same conclusion. The numbering was different, but I am prone at this point to accept that this is a highly probable forecast model to implement. Now, what this model is looking at then is that this B wave is probably going to be a 5 count. 1, 2, we've seen a 3, 4, and then this little decline that we're experiencing now, wherever it terminates, should terminate with that C wave there. So we'd get a 5, a C, and that would culminate wave 2. That would put us into a wave 3. And of course, that's going to be the exceptional trigger that we are looking for, because the bottom line is that we did receive the engulfing bullish candlestick pattern. That just happened the other day. That's these two candles here. but last 2 days have certainly not given us the confirmation necessary to actually trigger the buy signal. And based upon this current model that we're working with, we could see a little bit further price decline, but very, very shortly, because as I said, we're trading at around 12.13, as low as maybe 12.10 to 12.05. In other words, that 12.08 area is the area that will look to initiate and trigger a buy signal. We will send out, of course, a special trade alert to that effect via email as well as your phone on SMS, text message, as long as you have signed up for it. There's no charge, but you do need to enter your phone number. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.